Gabriel Yap, a GCP Global Chairman, joins us now from Singapore. Gabriel Yap, thank you very much indeed for coming on the programme. Just want to get your views as to, well, they're bullish long-term on China. Are they getting the strategy right, in your view?
Well, I certainly think that it's actually a right direction. I think essentially in terms of growth contributions from in the last 5 years, China has been contributing one of the major growth drivers throughout the world. Essentially, the other markets basically are coming from the other BRIC countries, that's Russia, Brazil, Indonesia, as well as actually India. I think essentially to position more into China at a time when it's actually undergoing greater changes, particularly in the financial sector as well as in the telecom sector, the two major sectors that Temasek investments are actually in, by far and large is about close to 40% of the portfolio, is actually in the right direction.
Well, they did draw down their stake in two Chinese banks. What sort of signal does that send out with a massive, sovereign wealth fund like this doing that?
Well, I think essentially it's a matter of doing what they call portfolio balancing. Now, in the case of CCB, I actually think that is actually a good idea because they have actually doubled their investments in the course of investments since the IPO level to the current price in which they have just sold off just about a couple of days ago. Well, for Bank of China, I still think that probably they could have gotten a higher price simply because the price that they actually sold it off was actually at a price of less than 10 times PE and a dividend yield of more than 5.4%. I simply think that they could have probably get a little bit more meat out of what they have actually done on Bank of China. But I think to actually reserve funds to move forward, to actually take advantage of market opportunities, particularly in China, as and when they come, particularly with the more interesting IPOs pertaining to the consumer sector that's actually likely to rear its head in the second half of this year would be a right strategy.
They made 13 significant investments so far this year, in the fiscal year, I should say. 9 in Asia, 4 in China, and 2 in India. That's what the mix is like. But they also do favor some of these developed markets as well, don't they?
I would say that on a significant basis, particularly in the last 18 months, the investments on developed markets, particularly compared to the previous 18 months, that was actually in the lights of some of the American banks as well as actually some of the British banks. Now, it does look quite a big difference in terms of basically a significant shift from the developed to the more interesting, emerging and challenging markets of Asia and America. I think basically what it's trying to position is probably to wait for value to actually present itself, especially with this ongoing uncertainty that's prevailing in Europe. I think opportunities basically would surface themselves, but whether it actually fits into the sectors that Temasek is actually interested in, I think by far large, if you look at the portfolio, financial services and banks, as well as actually telecom companies, are the ones they've been looking at. But in Latin America, for example, they have been slowly buying into commodity and supply management companies. So I would not be surprised if deals pertaining to this actually come out in the next couple of months.
Right, so steady as she goes, really, when it comes to Temasek. Nothing in terms of flamboyant returns they're not searching for flamboyant returns. It is about just getting there and having a slow return on their investments and play the long game here, don't they?
It is. By the time you walk up and down Oxford Street or Bond Street, I mean, it's unlikely that the investment changes that they actually notch up next year or this coming year would change significantly. I think essentially Temasek's position is actually to look at TSR, that's total shareholders returned on a longer term basis. And we're not talking about 3 to 5 years, we're looking about 10 to 20 years. Essentially, those numbers in the last 10 to 20 years has been in the region of 14% and 13% respectively. It's basically quite respectable. The only thing that I have a little bit on the worried side is actually in the last 5 years, a couple of things have happened. I think the total shareholders funds probably could have done a little bit better than what the market is expecting. Also, the peak profits that we saw at 18 billion for financial year 2008. And if you look at the current year's earnings as well as last year's earning at 5 billion, it seems a little bit still a way off, even though we have already into the third year of recovery after the global financial crisis.
Gabriel Yap, thank you so much for joining us. He's here from GCP, just having a look at Temasek's strategy and indeed the longer-term returns that they seek.